Good morning everybody, and welcome to today's webinar on managing your property portfolio, the impact of COVID-19. Today's webinar will be presented by special guest Philip Farrar, who is the National Development Director from Risk Management Partners, or in a shorter version, RMP. I'm Sarah Jarvis and I'm category buyer here at YPO in Corporate and Financial Services, and two of the contracts that I look after is Insurance Placement DPS and the Insurance Brokerage Framework. So I'm just going to give you a little bit of background on Philip before I pass over to him to do the webinar. Philip began his career in 1986 with Municipal Mutual and worked at two of their branches before joining the broker world in Aon in 1992, where he stayed for 12 years working as part of their national public sector team. He joined RMP in 2004, where he was responsible for service delivery in the north of England and Scotland, as well as managing his own accounts. Since January 2012, Philip has been RMP's National Development Director. Philip's specialism includes risk financing and tender management, and he has become a recognised speaker at alarm and insurance risk conferences. So before I pass over to Philip, I'd just like to go over a few items so you know how to participate in today's event. You have all joined this webinar in listening mode only. Please use the Q&A facilities at the bottom of the screen to ask questions while we deliver the presentation. We will go back to these questions at the end, and any questions not answered will be followed up with an email. So now I'm going to pass over to Philip for him to do his presentation.
Thank you, Sarah. And as you read out my CV, it makes me realise there's nothing like appreciating how old you are when somebody reads out your career path. Initially, I'd just like to start by welcoming everybody and trust everybody as well, and to thank you for taking the time to dial in, and also to YPO for pulling the event together and offering RMP an opportunity to speak. As the title of the session suggests, we're going to consider some aspects which flow from managing a large portfolio of properties and how COVID-19 or the pandemic has impacted upon this subject, and some of the risk and insurance issues which we found flowing from the pandemic. The detail around experiences is very much that of RMP and the challenges we found during this period of lockdown, but I'm certain there'll be much commonality with non-RMP clients and with other insurers. I think we've got around about an hour or so for this session maximum to cover the topic, and that'll be more than enough to go through the key points. It is a fairly dry topic, so I'll try and make the session as interesting as possible. If we get a chance to deal with any questions, which we'll try and do at the end of this session, we will do. But if not, I will circulate a Q&A after the event. Okay. Lastly, I think probably the last thing I'd probably say is no one's got a crystal ball, no one knows what the future holds. The information I'm going to impart today is very much as at October 2020, in what I am certain you all appreciate is some kind of a moving feast. I think, as just a side point, this session does qualify for CPD points, depending upon the structure that you have internally. Okay, so we're just going to run through the key points we're going to talk about. A little bit about the impact of lockdown and the kind of queries we found coming our way, the risk exposures, the risk mitigation measures that clients already had in place, a little bit about the policy coverage and some of the discussion points. I'm going to touch upon a little bit of the FCA test case which went through the courts recently, a little bit about claims, something of the future, and then just a summary trying to pull it all together. Okay, as lockdown began to take hold, we, as I think like many insurers experienced, began to receive daily calls from various clients concerned whether they would still remain insured for premises that were left, in inverted commas, empty, possibly for a number of weeks, on what action they should be taking. In fact, it was probably a fair fight between liability queries and property queries during those first couple of weeks. I've got to say, for me personally, I think it felt at the time during that last week in March as if the whole country was almost abandoning their properties and running for home. But of course, that wasn't the case. But I think we all got caught up a little bit maybe in the news and the severity of the situation. I think a key thing to remember is that COVID-19 does not affect property directly, but obviously indirectly it can have an impact upon property. Okay, so what was we faced with? Potentially a large number of buildings and property being left empty or unoccupied. And I will touch upon the key issues around the policy wording of that. I think from our point of view as insurers, there was uncertainty in some cases to exactly what was happening, who may have access to the building, what kind of position the buildings were left in when they were closed down. And the thought that, you know, these buildings could be left empty for some time, with possibly no one visiting for weeks at a time. I think our approach really was to try and work with the insured to take a sensible and an appropriate line around the management of the properties. We tried to establish what was happening on a property by property basis without going through the nth degree. And we encouraged our insured to pay particular attention to any buildings which could be vulnerable, isolated in a remote location, or potentially of a high value, either by way of contents or the building itself. Thankfully, what we did find is that most premises had some form of human presence on site, and if not daily, it was certainly weekly. And we certainly encouraged increased security patrols and the removal of more valuable equipment. The kind of concerns we had really was arson. What would happen? The irony is, of course, everyone is supposed to be at the time staying inside, as it were. But you know, arson was a fear we had. Electrical fires were also a potential concern. If there's no one on site, who's going to spot the fire taking place? Escape of water, this can be a real issue, certainly for premises where you've got several floors and can lead to significant losses. One of the biggest losses we dealt with probably about 10 years ago now involved an education establishment where we had a burst pipe on the 12th floor and we had water running all through the building throughout the weekend. Malicious damage. We know in certain areas the police targeted, or should we say kept an eye on some of the more well-known criminals and their activity to make sure that they were at home, as it were, and not taking advantage of the situation. Theft was a concern to us, but theft of contents is one thing, or damage to the building. Our main concern often around theft is what we call a secondary damage, which can be water damage or indeed a fire itself. Indeed, one of the temporary mortuaries which has been used during this period, I know that the premises was mothballed and they had thieves break in and remove all the copper piping. And again, that led to secondary damage, with all water damage after the piping had been removed. Okay, so besides the obvious risks, the key, as I've already said, was really what practical steps could be taken to try and safeguard the premises and do it properly. I suppose the key point was we right to be concerned? What was the reality of the situation? And we're just going to touch upon some of the steps that the insured have in place and can put in place to mitigate the risks. I think the starting point for any building really is that the building should have in place a fire risk assessment. I mean, the benefits of a fire risk assessment cannot be understated, but they will pinpoint the areas of potential danger that you may find for the members of staff and for the building itself. The construction of the building can often be a real benefit in terms of preventing fire. There was a project now some years ago about building safe buildings by design, and we've certainly found that's improved situations immensely, particularly new schools which have been built in the last sort of 10 or 15 years. Sprinklers, the benefits of sprinklers speak for themselves. Correctly installed and well maintained, they can actually make a massive difference in the event of a fire. The other advantage of sprinklers as well is that they can allow insurers to take more of the risk themselves or buy less reinsurance, because the estimated maximum loss or probable maximum loss is greatly reduced. So it does mean that on quite a significant building where the premium would be higher because of the reinsurance cost being passed through to the final price, the presence of the sprinklers can reduce the need for reinsurance or reduce those costs directly themselves. And this will become very relevant in the next 12 to 24 months. We've already started to enter the harder market, and we will see that growing and growing in the next 2 years or so. One thing that you may have seen some insurers doing is potentially trying to reduce their exposure or their line on particular portfolios. So where an insurer would have quoted quite happily for a major property portfolio maybe 2 years ago, now they'll be looking to lay some of that risk off and maybe only want to take 50% lead line on those risks. And we've had a number of risks referred to us, particularly in the education sector, where there's quite an accumulation of property. All these factors go into reflecting really the current market situation, which has only been fueled by reduced investment income and the losses which potentially could come from the pandemic. It's probably worth pointing out, I think, from an insurance company's point of view in terms of the pandemic, that the pandemic potentially hits every line of insurance cover you have, other than some minor lines. It affects virtually every single client that you've got, and of course it's affecting, it's a worldwide phenomenon. So those global insurers are getting hit on all sides, and different covers. I was speaking to an insurer the other week, and they're the leading insurer for cancellation cover, and they were saying to me that they've got every claim from wedding cancellations through to the Olympic Games, and they're setting aside something like £750 million in preparation to satisfy those losses worldwide. And that's just one example of the impact. Fire detection systems and safety equipment obviously play a key part in reducing the exposure. And just good physical security, really, robust locks, and everything else. Other steps include CCTV. Preferably it should be monitored, but if it's not monitored, it can at least act as a deterrent. The presence of security guards and security patrols or other human presence on site can often be a deterrent and can assist. One thing we encourage our insured to do, if they had any, was maybe remove some of the key valuables to a safer store, or potentially put them onto a higher store just to make it more difficult in the event of a potential theft, and certainly protect items from a potential flood risk. Not something that you could just dive into during the pandemic, but something that we've been encouraging all our clients to look at is the use of thermographic imaging. This is where you take almost a heat map of the wiring, especially around the switch gear and the switchboards, which is where often electrical fires can start because of the heat that can get generated. That can be a really cost-effective way, particularly in older buildings, of understanding what is happening and seeing where the danger areas potentially are. There are many other steps that you and the insured can take to mitigate the risk, and there's plenty of information around. I know our own website has a number of information sheets around practical steps that can be taken, as indeed do other insurers. Okay, so we're in a situation where we've got our clients contacting us, or we're contacting them. We're trying to understand what is happening with the portfolios, making sure that they are being managed as best they can. And one of the key things we were very keen to assure our policyholders of early on, and I think our approach was similar to other insurers. The question everyone was asking is the building unoccupied for the purposes of the policy wording? I've used our own policy wording here, and this is our definition of what an unoccupied building is. And essentially, it's when it does not contain adequate contents or stock to conduct customary business operations from, or the building is no longer used by yourselves to conduct business from. The key to this was the fact that we did not define any buildings which were left empty, which is not the same as necessarily being unoccupied, for the purpose of triggering the unoccupied clause in our wording. And the unoccupied clause does then place additional responsibilities on the insured and certain actions that they've got to take during a certain defined period. And I think once we'd got the message out that the buildings were, in our view, were just simply empty for the period of time rather than being occupied, it allowed our insureds to focus on what they could do and what was reasonably achievable. What I would ask is that everyone checks with their own insurer on this particular point, should we enter that situation again. And I know it is a bit of a moving feast around the country following the announcements yesterday. We and other insurers also worked with the ABI in terms of the general guidance that they were putting out to policyholders, so we could be certain that we felt the guidance was in line with our own advice and it didn't cause any confusion. Okay. So as I've already said, our advice really was to try and do what was practical. We tried to ask uninsured not to have a building non-inspected or not have a physical presence in there for no more than 2 weeks at a time, simply because often there could be damage or there could be a leak in that period, which could be obviously quite significant by the time a 2-week period has elapsed. I have to say, particularly, credit to all our insured, and I think also the public sector in general, most of our insured had people going in and out of premises on a daily basis. If it was a school, it may be a caretaker, it could be members of staff. One of my daughters is a teacher, and I know that she was going in all in a safe environment to either pick up work or take work home, as it were. Okay. So what do we think happened during that period? I think from our perspective, I can only speak really for us, but we did not witness a surge in claims for losses, be it fire or water damage, escape of water, malicious damage. We did not witness a surge on our book of business during this period. The vast majority of our insureds do handle reasonable sized losses in-house, and whether they incurred any increase in relatively minor damage, we won't know until we get all those returns in at the year end, and we will look at that when it comes in. We did, however, suffer 2 decent sized losses during this period. The first one was a £5 million plus school fire. This involved a contractor. The contractor had a young, inexperienced workman using a blowtorch. They did not appreciate the distance that they needed to be from where their place of work was to some flammable materials nearby. and by the time they'd realised it was too late and the flammable materials were alight and everyone had to get out. Funny enough, I was looking at some data the other day in preparation for this meeting, and our £5 million skill file for a contractor, I did feel a little bit better when I saw that one of the major supermarkets had a £19 million fire caused by a contractor who was using a blowtorch to dry off the roof so that they could then apply some material to the roof to make it waterproof. It just never ceases to amaze you how these things happen. And the second loss was just weather related. There was a flooding, and there's nothing anybody could do about that, really. It's just one of those things. It is interesting to know that very often summer flooding is a lot worse than winter flooding, simply because the amount of rain that can come down during the more humid periods is often far greater. Often the grounds can be quite bone dry, and that allows the water to move even more quickly. And if I haven't got it, but if I showed you a map of our flood losses, I reckon we have more in the summer than we do in the winter. Okay, so in terms of understanding a little bit about the losses and what we experienced, what we didn't experience, what I thought I'd share with you is you should be able to see on the screen now a graph from 2010-11 through to 2019-20, and this is a number of incidents attended by fire and rescue services. The source of the information is a Home Office, and you can see that from 2011 to 2010-11 at about 650,000 incidents. That was coming down gradually to around 2014, where it was just under 500,000. Then that trend began to increase and increase up to 2018-19, and incidentally last year showed a reduction in the number of incidents attended. And it's interesting seeing that curve, isn't it? Because the 2019-20 probably would be, as you might predict, starting just to come down a little bit, and why these factors are anybody can guess. But I wanted to look at that because I thought it would give maybe some context trying to understand what's happened during this period of the pandemic to material damage claims in general. So as I say, if we have a little close look at the statistics, the peak in 2010-11 was 650, down to around 500,000 in 2014. That trend turned through to 2018, where at its height it was getting up to about 575,000 incidents, but not as many as 2010-11. And 19-20, as you could see from the graph, saw a slight reduction in the number of incidents attended. Of the figure of 557,000 incidents, 153,000, or really about 154,000, were for fire incidences, compared to 182,000 in the year before, which is a 16% fall in all types of fires. Now, trying to get your hands on data in terms of the lockdown period, really from the end of March through to, shall we say, August, early September, is extremely difficult. Our own claims data isn't really appropriate because we only see the larger losses, and as I've said, we saw an absence of anything which you could pin down and be related directly to lockdown, and we haven't harvested yet the claims data from our insured. The Home Office, the ABI and the Fire Officers Committee, the other sources of information, still haven't yet produced their data because it's still being collated. So what I was able to do was actually have a look at a major loss adjuster and just the data that they had on their books and see if it really told us anything. What was quite interesting, and this is slightly skewed because it does include domestic properties as well, and where you'll see on the screen reference to commercial properties, that does include the public sector within those figures. So since the sort of start of lockdown, they'd seen reported to them a 40% increase in fire claims. Interestingly, 36% of the fires attached to outbuildings were arson for some reason, and 60% of those fires occurred in outbuildings or outside. And I think the key reason for that really was probably people taking advantage of the better weather. And I'll come and talk to that, about that in a little moment. So using the same data that the LOSA just provided, they were able to show that for every line of risk, there had been a decline in number, as you would expect, probably with the exception of fires. As I said, the reason for the increase in fires in outbuildings, I think, is really down to more and more people doing DIY, more and more people using power tools, which in itself can create electrical faults, and just the increased number in barbecues, people burning garden waste. So I think that's why there was a spike in fires. But as I say, it was predominantly in outbuildings, which would be garages and garden sheds. It's probably worth just mentioning one statistic that I did come across is that in 2018, which is the last full year where the statistics are available, according to the ABI, property insurers did pay out 1.3 billion in fire claims, which may put into context some of the figures you see banded around today for the impact of COVID. And here's just a chart that we put together, which just shows you the impact. So essentially, what we're seeing is there has been fewer claims in commercial premises, as you would expect, because there's less activity. There's been fewer claims in domestic premises inside, where the increase occurred was outside. I think I'm right in saying as well that was May 2020, I think it was the driest May on record for England and the second driest for Wales, while the spring period from March through to May also recorded the largest number of hours of sunshine on record. Now, I don't think I can put that down to the pandemic, but I think it does help explain why people were out and about outside more in their gardens. The last recorded peak in fires occurred during the June 2018 heat wave. So warm weather, everyone being out of away from work potentially, school children being off as well, all of that can lead to more fires. I just want to mention the last point there. Like I say, in outbuildings, I'm not so certain why arson grew as much as it did. It could be the way potentially some householders may have wished to explain what had happened rather than being honest and saying it was their fault. Like I said, the increase in electrical equipment was probably down to people just using more and more electrical equipment around the garden. Trying to place some of this into context, then referring back to the Home Office data, if you look at the last 9 years prior to lockdown, during that period, cooking appliances accounted for 50% of all domestic fires, whilst in commercial property, which includes local authorities, schools, town halls, cooking appliances and the electricity supply accounted for around 30% of all fires. One of the points we really want to try and get across outside of lockdown is the need to make sure that cooker hoods and so forth are regularly cleaned. Anybody who has a insurer survey undertaken of the property, these are kind of recommendations that you'll see coming through, and there's good reason for them. After arson and contractors, these are the number one cause. Okay, and then just a little bit of information about post-lockdown and the number of claims or percentage of claims within inside the properties. Okay, so just a little bit about policy cover now. So as I think a large number of you are aware, the FCA representing something in the magnitude of, I think, about 370,000 policyholders brought a number of test cases against around a dozen or so insurers. Our main property insurer, AIG, was not involved in those cases, but our insurer of Blue Lights and Borough and District Council's QBE was involved. Essentially, the argument the policyholders were putting forward was that they'd had a loss of income as a result of the way that COVID had affected their business, either by way of a direct closure or reduced income. They'd incurred additional increased costs of working, and all the cases really centred around the BI cover, and in particular, sort of denial of access. And I'm going to talk about some of the claims that we had around this area as well. It never ceases to amaze me how different insurers use a different form of words to express the same covers. Whilst I would never wish to go on a limb and unnecessarily defend insurers, it is fair to say that no insurer ever anticipated a pandemic of this nature, and the insurance policies were not designed to cover such a pandemic. The results of the test case was delivered some weeks ago, and they are being appealed, and insurers and the FCA have asked if they could leapfrog the Court of Appeal and go straight to the Supreme Court and the House of Lords. And whatever that decision comes through, it's probably going to be heard, I think, early in the new year is the time frame. Then that will be binding on all parties. Okay, so we had a couple of claims that came to us which we did repudiate. One was on our computer wording, and this was quite an interesting situation in that we had a local authority who presented a claim for a very large number of laptops, and their argument was they were not allowed to get back into the building, and therefore their home workers needed to work from home. And as a consequence, they needed to purchase the laptops on their behalf. What HSB, who write our computer cover, they were not party to the FCA test cases. They did repudiate the claim, quite rightly in my view, but then undertook to reassess the situation in light of the decision by the courts. And after the test case, they stood by the repudiation. The wording on the computer policy said, preventing access to or use of your computer system following a public or police authority using its powers to protect life or power. The argument really was, from our perspective, is that we felt that the police nor any public body, be it central government or even local authority, had denied anybody access to their premises and said they could not enter. They were allowed to enter. There was no full closure of the premises, and in fact, I think local authority premises were classed as category 5 in the businesses, which were amongst those who weren't ordered to close. So that claim was repudiated. The prevention of access did not arise out of a fire or something of that nature, some kind of peril that might be insured on the policy. And in any event, they still had access to premises. So that one was turned down, and the other claim that we received was around loss of rental income, usually around the markets, as it were, and the AIG wording which we use for the vast majority of our local authorities was quite clear from the outset that it only covers specified diseases and not notifiable diseases. And again, those claims have been repudiated. I'm pretty certain the situation will continue to unfold, as indeed does the test case when it goes to the Supreme Court. So where are we at really with this? It's probably worth at this stage in the session just have a little recap of where we think we are and what we've got to. First and foremost, we've established that the first round of lockdown did not lead to a surge in claims, certainly on our book, despite the collective fears that us and our policyholders may have had. We only had a small number of claims that came into us. They weren't covered, you know, and that's been sort of reaffirmed really. But we are watching obviously with interest what the FCA test case comes up with once it's gone to the House of Lords. As I speak today, we're possibly about to launch into a second lockdown. It depends on what part of the country you're in, how it may affect you, and it does raise questions about what about beyond 2021 and where we may be. Okay, so I just want to touch base really a little bit now, just about what I think the future might look like. I did play this song to the YPO team before we came on air, and to a lady, none of them had heard of it before. But for those of you who are slightly older, you may remember the song by the Specials and a song they played or they made called Ghost Town, which was really written as against the backdrop of the depression of the 1980s. Personally, my own view is when I've gone round, I live in South Manchester, when I've gone to Manchester City Centre, we often we've got a large shopping mall near where we live called the Trafford Centre. It is not the same without any shadow of doubt. And I think it does raise questions about what the future may look like and what is our role in that future and what do we want that future to look like, both for us, both for our children and our children's children. There is an absence of commuters without any doubt. The visitors obviously aren't the same, both tourism and visitors within from the same country. Manchester, I think, was the third most popular city centre for stag parties and hen do's, and if you ever went in on a Saturday morning, you'd often find groups walking around looking for somewhere to eat and have breakfast. I've gone into Manchester probably half a dozen times on a Saturday morning, and I can only recall seeing one hen party, and I say party, it was 4 girls. I knew it was a hen party because one of them had about to get married a dress on. Shops are closing at a phenomenal rate. It seems to be that only the high-end shops seem to be surviving. And for a lot of areas, the infrastructure as we know it and the working community has been decimated. Sandwich shops, coffee shops. I know some areas have seen a surge. There are towns on the outskirts of the Greater Manchester area in the foothills of the Pennines who've seen a bit of an uptake because people aren't willing to travel further into the city centres to do their shopping. I mean, it'd be interesting, isn't it? Will the public bodies maybe be more inclined to try and bring office workers back into situ to help save the centre, a little bit like a large number of bought shopping centres. Certainly from the evidence that I can see, speaking to 3 different clients in the last week, that isn't going to be the case. They're looking at reducing their number of desks. Okay, so as things stand at present, we know we've got quieter city centres, we've got quieter shopping malls, we've got more deliveries to home. In fact, the Amazon and the Next delivery people, they will be coming to our Christmas dinner, such as they are. We only leave our house now actually to take returns back. I've already mentioned the shops and the stores are closing. The infrastructure of our towns are suffering. Hotel and leisure industry seems to be affected, obviously badly affected, but it's beginning to get back. Leisure is beginning to get back to normal, but certainly seeing some of the news items last night, certainly some of the smaller gyms are privately owned, they probably this could be the final nail in it for them. The closure, certainly around Merseyside. Yeah, and it almost feels like not just the UK economy, but the world economies are almost being reset and redefined, and we are living history really in many ways. And it'll be interesting to see how kind or otherwise the history books are on today's government when they look back. In resetting those economies, they are resetting all our lives, aren't they? This presentation I'm doing to you now, this would have been a face-to-face session in Wakefield, you know, probably to a smaller audience maybe. And whilst I think there are real benefits of webinars and the sort of agile working background, equally it does come attached with some downsides, and I think we all really just need to have our eyes open to it. How much influence we have as individuals, I'm not too certain that we have an awful lot. Maybe if there's a real rebellion. It's interesting. I did a session on agile working, and I asked a large number of people what they thought around it, and the people who wanted to get back into the offices tended to be the younger generation. I think they see it as very much part of their social fabric of their life, as it were. A lot of people said they would like the benefit of both. Well, you know, companies, both private and public sector, they're not going to keep offices open on the off chance that people might pop in because they feel like it. I can see it shrinking significantly. Only in the last 2 days, we've been speaking to some firms and solicitors, and one of them has confirmed that out of the double-digit number of offices they had around the UK, they're going to be reducing them down by at least 2 come March 2021, and they aren't alone in that process. Could the accommodation, could the buildings be converted into residential accommodation? I don't know. We've already mentioned, or already touched upon, how shopping habits have changed drastically, and whether they will ever revert back is going to be highly unlikely. Have we converted the greater time that we have, the time we don't spend commuting, has that been converted into more leisure time or more downtime? How many people have taken advantage of it? I don't want to get too straight too much into agile working, but you know, it feels like everyone is even busy. They've ever been. Certainly, people I speak to, it's one Zoom meeting after the other. There's a lack of thinking time in between some of these sessions as well. And if we had a choice to work from home or the office, which way would you jump? You know, does it require 75% of all employees to say yes to go one way or the other? And I raise these points really just so that in terms of managing risk, managing buildings, these decisions, if we have any influence over them, are made with our eyes open. It's likely there is going to be some kind of hybrid, I would imagine. That people will have access to a desk. It may not be a desk that you had previously. Where I live, you could argue that the centres of Leeds, Manchester and Liverpool are all within an hour's reach of each other. Probably Leeds to Liverpool maybe a little bit further, as it were. And it may well be that, you know, if you've got an office in each of those cities, you then close 2 of them and put one in the middle, potentially Manchester. Some cities may well boom out of this, but it'll be interesting to see how it all does end up. That could be the future. If these buildings get mothballed, become unoccupied, who is going to buy them? You know, is anybody investing currently in commercial property? What are the pension funds doing? I don't know. Retail parks were always the backbone of pension funds, weren't they? Maybe now they'll be switching into Amazon. For those of you that ever drive, if you ever get a chance to travel on the M62 from Manchester to Liverpool, you'll go through near Warrington, where there's absolutely, I think there's 3 or 4 enormous distribution centres that have opened up, all geared to home delivery. So if you're managing a portfolio of property, what does the future look like? Could it be that you're managing high levels of occupied buildings? Will you be able to sell them off? What will happen to them? Will you mothball them in the hope that one day they might be used for something? Will we be in a situation where you get partially occupied buildings, which is a phenomenon that we already see today, where only part of the building is occupied? As I've said, could it be converted into residential accommodation? Possibly, for some suitable, as it were. And what are going to be the resources required to manage that portfolio and make sure that it isn't prone to attack? Okay. I'm just looking at my notes here, and as we're just sort of drawing to a close, probably one thing I wanted to mention in terms of property and protection of property, and what I think are some impressive statistics that we see over the last 9 years or so. As Sarah explained, I started my career at Mutual in the 1980s, some 30 to 40 years ago. I'll leave you to decide whether it's near 30 or 40. And the number one risk by far was school fires, particularly arson. And that was a collective that we had to face both with as an insurer and with our clients. And I think it's testimony to all involved in the process, insured and insurers, and most notably ZM, for all the work and the risk management measures which has been taken over that journey. Whereas till today, the risk is nothing like it was back then. Who knows what the next 30, 40 years will hold from a property risk perspective, but I think it's incumbent upon us all, no more great responsibility than anybody than we have as insurers, to really try and make it the best that we can and as safe as we can. Okay, so that concludes my session. I think we have got about 10 minutes spare, and we shall try and pick up on any questions. Can I just thank everybody for listening? I hope you didn't find it too dry. I try to give something to everybody and try to make it as interesting as it could be. I'm happy to take any questions if we've got them.
Thank you, Phil. That were really, really interesting. I'm sure everybody else found it really interesting as well. Just to let everybody know that we will be providing this webinar recording. I'll be sending a link out over to you in the next couple of days. We have had a couple of questions, Phil, so I'll just go through them. They do think that it's been answered, but I think it's a good question. They put, what would you consider to be a sensible rule of thumb frequency of inspection for unoccupied premises? If the frequency is not stated in the policy wording, understanding that some premises may need a tailored approach to inspections depending on their value, location, etc.
That is a really good question, and first and foremost, I would say it does depend upon each building needs a plan itself. I think our unoccupied clause triggers at 5 million, so there's maybe a rule of thumb, as it were. I think you've got to look at the location, the number of previous attacks, how valuable is a building, what would you want to do with the building if it was burnt down. We've got quite a significant claim on the go for a community centre, and almost 2 years to the day when it was burnt down, we still haven't got any resolution as to what the council would like to do with the centre. I think sort of between 1 week for your more valuable stuff, I think between 2 and 3 weeks for other premises. But I would ask that you do ask each insurer. I don't think you want to be going months on end without checking on the premises. Again, depends if the electricity systems are turned off, is the water drain from the systems, is it winter? All these can play a part in that frequency.
Brilliant. I think you've gone into a lot more detail there, Phil, so thank you for that. Has anybody else got any more questions before we finish? now's your time to answer. If not, if you get any after this webinar, if you just want to drop me a line, which is insurance@ypo.co.uk, and what we'll do is we'll find the answer and we'll come back to you. Once again, I'd like to thank Phil for his time this morning on and doing the webinar. We really do appreciate it. So thank you very much, Phil. You've given us all something to think about, I think there. It's definitely uncertain times ahead, especially now that we're in this second stage of COVID, where different people are in different brackets. So I'd just like to thank everybody for joining today. Like I said, I will be sending out the recording to the webinar, and I'd just like to wish everybody a great day. Thank you very much.
Thank you, Sarah. Thanks, everybody.